Hey, good morning, guys. Hey, guys, good morning. This is Anurag Rastogi. I'm uh, I take care of product at Technospire. We are a Bangalore-based company, and we are there to provide the financial technology platform to banks and other financial institutions across emerging markets to help them setting up digital banking platform to take inclusive banking kind of a concept out in the market, taking banking to the last mile through minimized capex and by bringing more innovative thoughts behind taking banking to the consumer. Uh, our flagship product is known as Finex, which helps a financial institution to leverage a network of agents to take to enable bank financial services and products over the counter as a service to the consumer to purchase, and at the same time we leverage on mobile technology to help creating a very state of art, you say, uh, innovative mobile payment system through which as a consumer anyone can can open an account in line with the KYC guidelines provided by the regulatory body, and then add money onto that account and start trading, start doing the business. As part of this session, guys, I want to take your attention in terms of having a discussion around a very interactive discussion, I would say, in terms of how digital banking is changing the landscape of financial inclusion or financial services distribution in the emerging markets. Kenya, for example, is can be considered or is always considered as the main center where the first of its kind, mobile payments technology came out in the market, wherein a infrastructure was laid by institution like Safaricom, and then they anyways built up a network of agents or distributors to sell their airtime, and from there they all started thinking, why banking cannot also be provided as one of the service, while they have covered up such a huge landscape within the country, covering connecting dots, connecting consumers to purchase certain kind of value-added services or value-added services, or say airtime, kind of a business. Now, in terms of that, they introduced this mobile wallet as a concept, and we are aware that how this mobile wallet or digital wallet has emerged across so many other countries, including ourselves in India, in the form of PTMs and in the form of phone pay even today, where consumer can come in, can use this application on their phone, and Google Pay, of course, is the latest example to it, leveraging connectivity with the banks through the national switches. So Kenya definitely was the pioneer in leading this whole effort out in the market and connected or leveraged the mobile payments. And following the example of Kenya, a lot of countries started thinking through hard that how can the same can be leveraged by taking the banking to the taking the banking to the last mile. Now, while doing so, it is also important to understand that digital banking is just not about creating a channel and adding certain services, also about creating a very cohesive ecosystem by bringing different set of people or different set of organizations together, creating a system where a service can talk to another service seamlessly. Like, for example, if I'm using mobile phone as a consumer, if I can purchase airtime, then why not can I purchase insurance, or why can't I do a cash out, or why can't I do a cash deposit, or things like a very small set of service which can be leveraged efficiently, and then a whole system where if I'm having account on this system, then I can go to a merchant and make a payment instantly. So in light of that, digital banking definitely is good one good approach where the cost is more to the financial institution is more around thinking of how innovative they can be on using the technology or bringing the technology out, rather than setting up heavy expensive branches and then waiting for the customer to fall in. And in the emerging countries also, so far, if you see, the cost of the financial products also is something which have always caused a concern to the consumers not coming to the regular banking channel. They don't want to take a service unless there is a huge benefit behind it. But if the same thing can be achieved using a technology, then in that case your home, the consumer would be able to think, there is some huge benefit or a big benefit behind a particular product and service, and then they go. For example, in case of our country, after this demonetization activity and the Pradhan Mantri Jan Dhan Yojana, the whole idea was so simple and so intuitive, for a customer, that there's no cost involved even to go to open a bank account. And once a bank account is opened, there are so many other benefits involved if we start thinking of putting up the money or saving the money into this account. For example, there are certain schemes even today which are executed under Government of India's vision for girl, for a child. There are certain policies which someone can buy or can make a payment every year, a small payment from this account, and then the benefit comes back. The direct benefit transfers can come back to these accounts. So similarly on these lines, previously, if you see, the banking was more to do with you go to a branch, and then to the branch you over the counter, you open a bank account, then you do a deposit, then come out, and then every time you write a check to make a payment. This phenomena was overcome by internet banking. Now you have got an internet banking portal. You log in there, and you still do certain operations, but check and all cash still are prevalent. Then comes the mobile banking, where on the mobile app you probably do the same thing, but beyond it, it's the fintechs who have really redefined the whole set of things. Safaricom, as I was talking about it earlier, they revolutionized the whole concept in terms of creating a digital wallet. Customer comes in, performs these transactions, goes off. And then, all the advanced fintech companies today, what they're trying to do is, you talk about lending, it's possible. You talk about insurance product, possible. You talk about registration and things, technology around compliance and registration is possible. And if you start thinking and connecting these dots together, it's nothing but the whole banking as a service has been taken up by fintechs in different spaces, and if they collaborate together, brings a digital banking out on your palm through leveraging the mobile technology. So in these markets, this is a phenomena which has really shaped up. We as Technospire have successfully rolled out our platform in different forms, in different versions, with different brands in few countries in Africa. And this is exactly what we discovered, that while creating the whole digital space, digital banking thing, it's just not about, going and deploying a solution. It's also about collaborating. It's also about creating this cohesive ecosystem. And we ended up, aggregating different service providers. We provided them platforms in terms of automating their billing, in terms of automating their service fulfillment part, and brought them together under one single system. And this single system, we call it as Bank in a Box today, wherein a consumer can be acquired, a banking service can be rolled out by agent, a merchant can be onboarded, and without a card, without a heavy cost of investment around in terms of setting up the branches, all these things are fairly possible. A customer can make a deposit, customer can take a withdrawal, Customer can do fund transfers across any bank, and then they can go ahead and can do merchant payments also through mobile phone, scan and pay kind of stuff. Now, we have got some 80 views now, and I'll say that whoever have joined in, I would like you guys also to participate with me, and if whatever questions that you want to have, whatever discussion that you want to have, let's begin that. All right, so the first question that I've got is what really the factor driving this change? The tech-savvy customer or the push from the government or technology? So the main factor is if you go behind this, I mean, from where the point of beginning, from where all started. The factor is technology was not there initially. I mean, technology to the consumer wasn't there. It was a technology by the company who created this kind of infrastructure, to connect their customers, first of all. And then the second factor was, now since we have deployed this heavy infrastructure, how can we build, more use cases or business cases around it? So for example, MNOs set up the whole infrastructure to provide the feature of mobile telephony, where you pick the mobile phone, make a call instantly rather than those wired phones. But now, because this is happening and people can connect on this GSM network, then how can a banking service on a GSM can be built? Is how on the USSD the revolution happened. A wallet can be instantly opened, because in all these countries, even if you talk today, 60%, maybe 70% of the people are financially included, which means they have a regular bank account where they make a deposit and then they get a benefit out of it. Otherwise, 30% is still, in a state whether they should go, or they do not have a sufficient literacy also to understand the advantages that they can get by going into a banking system. So now, when the account is open via the wallets, say, or the mobile digital wallet, for example, the kind of Safaricom or EcoCash from Zimbabwe have done it. The wallets got opened. People started understanding the value of it, that it is seamless, it is smooth, it is something which can be trusted, and their money is safe. And this was happening in silos within a country, and then by the time Facebook and social media channels like Twitter, WhatsApp emerged out, and they created a freemium kind of a model where you use WhatsApp, you don't have to pay anything. That's how people understood the power of technology, how a consumer can understand and relate easily how to utilize a mobile phone. And this is exactly what happened and took banking, the bankers to think, to open more services on the digital channels, attract the customers, bring them seamlessly on the platform, let them buyers use the product and service. From the government perspective also, yes, it is important to bring the population, the underbanked, into the banking side, because it is so easy then, to manage the whole economic of it. And this is the push from the government, as in terms of what innovative things can be done. The infrastructures are brought in together, and now this is how the companies, the service providers are talking to each other, because of the complete set of network which has been enabled today. And of course, the technology has played its roles in terms of connecting these dots together. The kind of banks who look for a digital platform, see, I think all the banks are thinking around this thing to go digital. It's about which side of digital banking they want to go behind. For example, retail banking, of course, is a big, massive market where every bank who is into retail segment wants to jump in and go and try to open as many channels as possible. I mean, today, if you see, even there are chatbots through which they want to interact with their consumer and try to understand the sentiments, the personas, and their expectations, so that that data that is coming together, they can mine that data. Their scientists can sit on top of it and understand what kind of products their customer wants to buy, to keep this banking as a business happen. And so every bank, every financial institution pretty much understands the value of this transformation that they want to take care. And certain banks, global banks, have already set an example. You talk about DBS Singapore. They have launched their entire banking portfolio in India through their DigiBank system. You talk about BBVA, Spain. Today they have opened, they have transformed their banking. They have opened the API banking. They have created the API banking model. And so many customers, so many fintech companies are leveraging on their API to create solution catering to certain set of segment of the society. Then you talk about companies who are focused on SME side or MSME side. They are also trying to leverage these APIs from the bank, create a solution and take it to the masses. So I think uh, every bank today either wants to either wants to spin off some a department out of their institution and create a model catering the customer digitally, or they are trying to stop the whole traditional setup and go 100% digitally. So every bank is thinking about it. Yeah. Yeah, two questions, guys. Other questions would welcome. Innovation is at rocket speed. Yeah. This question I'm getting on WhatsApp. Guys are asking, oh, this is a good friend of mine. He's asking, innovation is at rocket speed, but how could we assure security to our customers? Yeah, security is always a big concern, area of concern. Similarly, is the compliances side. That yeah, mobile payments or digital banking has enabled someone to do an instant transaction, but previously there were checks. You sign the checks, you ensure this is all done by you, and then the transaction will take place. But in case of digital, your password is not secured, or your network itself is exposed to vulnerability, can allow someone to hack and take your money out. But you see, when we have evolved so much, and so much of it has happened, that all the regulatory bodies across the globe, they have also defined the criteria that if we are trying to bring innovation out, what kind of checks and balances needs to be in place. And our market, India, has set this example where today you see we have got this unified payment interface on which a company like Google has also thought about changing their Google Wallet into Google Pay, leverage on UPI, and enable the Google users to make a transaction. Then think about it, that on the security side, the checklist that has been asked by the regulatory body to companies like them to set an example, that this is how the transaction will take place. One quick example I would like to give you about Uber. When they came in India, they launched their service by connecting the card, and every time a trip was over, the transaction was instantly swiped. Your account was getting debited. But as part of our regulatory, it is very clearly written. A transaction cannot take place in single go. It has to be two-factor authentication, which created a opportunity for Paytm, where the collaboration took place, and first you have to load money into the Paytm wallet, and then that linked account will be used to make the payment to the Uber, and led to Ola also to think about creating an Ola wallet, and so on and so forth. Even today, if you go into an online transaction, you have to do a two-factor authentication to authorize that particular transaction. So from the security perspective, you see, two-factor authentication mechanism is there. Then on the security layer itself, deployed on the network, so many checks and balances are enabled. So I think that part particularly is a big focus area for regulatory, and without passing it, it is not possible for anyone to just launch a solution overnight in the market. It has to go through, and it goes through those checks and balances. What is it driving or triggering? Upgrading to the latest technology would be enough, or uh, see, technology will keep on evolving day in, day out. It is important to understand that the kind of technology that we have today in the market and the kind of stack which is available, important is the products and services which are required for these masses to be on the digital banking side. Is it something which has happened? So if that has been enabled, then you can say, now technology revolution can take place. Otherwise, uh, first important thing is whether the necessities on the market has been fulfilled by the technology that is today or by the products that we have today. The impact of digitization can be measured. I mean, there are so many metrics, to be honest, which can come into place to think about whether there are, to even measure the impact of digitization. For example, do you want to measure the impact by saying that how many citizens of a country are there on a banking system, in terms of how many accounts which are there lying into a financial institution or into a group of financial institutions today versus the population that your country has? Or you want to measure the impact in terms of how many cards you have issued, or you want to measure the impact in terms of how many transactions on a digital channel happening on a daily basis. So the measurement criteria could be multiple. Like in case of our country, our measurement criteria today also depends on how many UPI transactions we are doing as a population today. How many of them are on the merchant side? How many of them on the services side? So how many of the consumers have spent time on mobile banking versus internet banking? So so many of areas to measure. But most importantly is to understand what is the ratio of people who are unbanked versus banked when this journey was thought about and started versus where it is today. How many of them are utilizing uh, technology only as a channel to do a transaction, or they're a mix of technology and manual, work where no technology is involved, walking into a branch and doing the transaction kind of a thing? And then what is the volume that has been moved from a physical way of banking to a digital way of banking? And how much of this is now going to help the financial institutions who are into this direction, or who are doing things like that in terms of safeguarding their operational cost, and then whether this operational cost that they have saved is creating something, a value proposition, or adding more value proposition to the consumer. Interoperability is a good question. Make sure with so many software banking system floating, how do we tackle interoperability in future? So as I mentioned in my in this session earlier, it has to be a very cohesive ecosystem. We as Technosphere, when we were rolling out the solution in all these emerging markets across Africa, we discovered, and we all of us were together, we echoed only one thing, that it has to be a collaborative model. We so many companies doing things in silos. We tried integrating, aggregating them together. We also enabled them to talk to each other. So interoperability definitely helped in terms of achieving the overall time to do a transaction from few days to few minutes. And because of it, uh, we are the advocates where we say whosoever is doing whatever, it has to come up together as a collaborative model. And all the institutions, all the fintechs or banks, they must think how can they leverage each other's strength points and connect the dots together in a way that a proper digital ecosystem can be built for a consumer then to start coming and doing a transaction. Uh, Modules constituting a digital banking platform could be multiple, but in a very seamless experience, if I have to create it has to start from KYC part. It has to start from KYC, where you follow the regulatory compliances and know who is your customer, identify your customer properly. Once that is done, you create an account and allow all these things to do the transaction. I mean, bring services like loading money, bring services like transfers, bring value-added micropayment kind of services, merchant payments, cards, whatsoever. But module-wise, KYC is the first thing to begin with, and then interbanking transactions is the second most important thing, because then it opens, it creates an open channel, an open ecosystem for a customer to not to think, that if I'm going to open an account with X, I'm logged with X. They can move, and this is how the pattern is. It has to be very, very open system. Yeah. Do you think the increasing popularity of Bitcoins, other cryptocurrency, would have any impact on digital banking? Well, look, first of all, let's understand what is digital banking is. I mean, this is also something. Digital banking, is it Bitcoin or I mean, or you're linking to Bitcoin? I don't agree. That digital banking is just Bitcoin. These are just for me, it is more like a closed wallets, wherein you're purchasing some currency in some form. Yes, they are backed by more advanced technologies like blockchain, a distributed ledger system, which is more secured. Across the world, you can do transactions and all. But is it a banking in true sense? Answer is no. For me, the banking in true sense is where you have enabled a consumer to be the part of your economy. If do not have a bank account in my country, but I'm having a Bitcoin account somewhere, am I the part of this? Am I contributing anything to the economy, or I'm getting any benefit out of this? The thing, the whole economic advances that we are doing. Answer is no. So on the digital banking side, important is to understand how, using the technology on digitally, you get your customer into a regular banking system. After getting it, how are you bringing the benefits to this guy? The popularity wise, yes, Bitcoin is there in few markets, but people are very skeptical about it. And then how are you going to use the Bitcoins? Have you connected that kind of a ecosystem where you are getting this Bitcoin and you're using this Bitcoin somewhere? So impact wise, it is just one transaction set, to be honest with me. In countries where it is allowed to create a Bitcoin or cryptocurrency kind of a model, it will become just a additional account type or additional transaction set, nothing more than that. For banking of future would be more like DIY service, 100%. Yes, I do agree with you. And your question is very, very valid question. It is going to be a DIY service. I was reading this interview of a gentleman who is leading this chairman MD of a large Australian bank in India, and his worry is about, we are not bothered about we are not seeing a threat from fintechs coming out, but we are seeing it is going to be a threat for the banks if we do not match the pace and create a model where a customer can come in and do and get the service that they just want to see, versus how Amazons and Apple of the world have created their platforms. Facebook has already launched it, and the whole idea is to make it so simple and so easy for a customer to understand what they want and how they can easily get it from their bank. So yes, it is going to be, the future is going to be more like a DIY service. You want to save money for a trip. How easily you can create a milestone, and on milestones how can easily get the triggers, and then how smartly your bank is advising you, giving you the advices, how can you make more money out of it to achieve this particular goal. And this has to be very seamless, streamlined. Customer, even if he has forgotten he's created a goal, bank must know and should automatically tell this guy, this is how you're going to do it, you're going to achieve your goal. Different banks have different use cases specific to their market segments. How can Technospire expedite such needs? So at Technospire, the beauty of our platform is that we we have taken our problem statements more like a at a granular level, more like a transaction set. Our platform development approach was not to go away with fintechs or banks, but to bring something together to help them uh, to help them giving something where basis on the need and the necessity of the market and the segment they are serving, they should be able to use our platform to create that transaction set, convert that transaction set digitally or technically onto the system and go ahead with it. For example, uh, in few markets, the kind of problem statements were more like that a lot of funding or grants are coming from international organization, but they are ghost transactions. They're going to the guys who probably have died years back, and there is no way to even know where this transaction is going, to whom it is going, and even if it is going to the right person, there is no idea where this money being spent upon. So now if you see this statement, it's like, there are so many things to do. First of all, you need to understand how you're bringing or registering a customer. If a registration is successfully done, you have to create you have to create points of spending of different transactions. It could be a merchant payment, it could be a service payment, it could be a diaspora money remittance, it could be anything. But you have to bring in together to know where the money is being spent. So for us at Technosphere, we have jotted down these problem statements. We're converted. We think more from a perspective. This is a transaction set that has to come onto a platform, and hence the whole architecture that on the platform we have done is so open. It's so easy for this platform to go and talk to another system, another service provider systems, and connect the dots together. The origination to the consumption, everything can be seamlessly achieved. Difference between new banking and digital banking? Well, Asmita, it's a very I mean, to me, both are pretty much the same. I don't see much difference, except that one is taken, digital banking is taken more as, it's a something which is coming out of the bank, a traditional bank, doing a transformation of bringing their internal systems together so that they can create a very holistic and seamless experience of for their customer to come onto a channel and do a transaction. While on the new banking side, it's more like uh, bankers, either they have come out of their system and trying to establish something where they can solve a particular problem statement or a particular segment by building a solution, still collaborating with the bank in the traditional bank in the back side to process everything, but the whole front ending and the whole customer acquisition to solving the problem or platform building can be done by them. So paper thin difference, to be honest. But new banks are more like, they love to collaborate, and they are very much open to collaborate with traditional banks. Yeah. Smita, can you be a bit, when you're saying pioneer implementation existing now, so do you want to hear from Technosphere's perspective, what kind of implementations that we have enabled, or you want to know from a global landscape perspective, the kind of implementations, the pioneer implementations?
How are you? Good morning.
Okay, at a global level, there are quite a few institutions. I mean, not few, but a lot of institutions which are doing this. Personally, for me, the best use case or the best example that I see, or see the motivation that I get, in terms of thinking also on the foot, on the fly, what kind of banking ecosystem it has to be when it is talking about digital banking. I take the motivation inspiration from DBS Singapore. The whole system that they have built, they have created, and the approach that they have taken, it's like in a bank, they have brought in how a technology company works and how a apples of the world would be thinking of creating experience, the experience that they have built on their consumer app, on the consumer side as well as on the merchant side, and the dots are connected nicely. Once you are into their system, you have everything easily navigated, and all the transaction sets that you want to achieve is possible through that. So that's the best example, the pioneer, personally, in my opinion. Could be many, but DBS Singapore is digibank from DBS Singapore definitely is best example on the digital banking side. Yeah, there's any other questions that you may have? Uh, Glad I am able to answer your query. Well, if we are done with the questions, okay, here I got two more questions. With Alexa and Cortana now helping in voice-assisted payment, think fintech would again have to change align their products with the new changes? Definitely yes, because uh, consumers have now, the consumers that all of us are trying to serve as either a provider of technology to FI or FI themselves. The consumer behavior and the consumer understanding to technology has grown multifold. Uh, Now they understand, and they also look for a more easy way of doing their job done using technology. So voice payments definitely is going to play a major role in the future. Same like how on the biometric side, it is bringing that kind of a change. So yes, organizations into this space definitely have to think, and create their roadmaps onto their products. They have to bring all these together, these features. Now the thing is whether they should do it themselves, or they should explore the model where they can go and utilize the service from this provider. So there are a few companies who are even doing sound payments today. So as a business, which is the quick to go to market thing, and the thing which is already done and dusted, how the benefits can be brought together for all the participants. That's the thing that the FIs or the fintechs must think. And the future of technology, the things that are getting achieved, they must fall in place. You talk about AI, ML, everything that has been achieved. For example, lending is happening, and there are algorithms built by companies who can give you corrective analysis, correct analysis about the credit history or the future history or future pattern using this data point. If it can be collaborated and quickly done, why not? It has to be. Otherwise, building and then waiting to build and then wait for a rollout and then expecting the customer to come in may take away the whole customer segment out. Yeah. I think I hope I have answered your question. from Lakshmi and Samisha together. Are you guys together sitting? Yeah. Well, guys, I think it was a good session so far. We are able to help you explain, how and why the digital banking thing is a thing for the future and how it is changing today. Oh, regional language capability, smartphones would help in increasing the reach of digital banking 100%. All the feature sets the companies, the manufacturers are thinking today, everything is going to play important role. As I said, connecting the dots is important thing to understand. If a regional language can help reduce the friction of from the financial literacy perspective, definitely it is a thing that has to fall in place. I mean, I'm just giving an example for our rollout we have done in Mozambique, where the the people are people do not understand English versus Portuguese easily. So rather than we building the whole thing, converting the whole language into Portuguese version and then supplying it out, we are using the technology. It automatically translates and transaction can be done easily. So digital experience for vernacular customers is very important aspect. It's the regional language you say. You think about the products also, even to know, certain products can fly in say the northern part, but not in the southern part. So that's also, on the location basis, the banks must think of creating those kind of products where if it is changing, the personas are changing, the customer behavior is different, the product offering itself should change on lines of that. The voice assisted payment, see, the biggest advantage can be for a voice based payment would be, to overcome the kind of frauds which can take place even if your OTP is being compromised or your password is compromised. So this is about in the emerging markets, when, all of a sudden the volume comes in place, chances of this risk goes high, where systems can be compromised, because when you talk about scaling the platform, so it's not necessary that every time the companies are able to think everything right on the security side, but voice assisted payments gives a trust factor to a customer, and they would be more, they would be able to trust the system which is either managing their funds or enabling them to transfer their funds. And this thing is very important to understand from a perspective for the guys who are not on the banking side for more than 30 years, 40 years now. And all of a sudden you want them to come to a banking side and start doing transactions. So definitely this is going to give them a lot of, kind of a trust factor, a feeling like that their money is still secured, they are in the safe hands, and they'll get benefits out of it by doing that. So yes. Yeah, so I think we are done for now. Guys, you can reach out to this page and can drop questions. I would be happy to answer it. Or you can reach out to me at anurag@technospy.com for your questions and queries, and I would love to hear and answer you in terms of any inquiry about our product. Next, please feel free to reach us out. Thank you so much for the lovely session, and for your participation, and for the wonderful questions you guys posted. I hope I am able to answer most of them. Thank you so much. Have a good day. Bye.